Today's show is brought to you by Crane Shares. Josh, one of the most popular categories of ETFs over the last couple of years has been covered call strategies.
Why do you think that is?
People are looking to be long and also get income.
Yeah, I get it.
So Crane Shares has this product. The ETF is CLIP with a K. KLIP. Is it KLIP? I just say KLIP. That's what I'm calling it. KLIP is a covered call strategy on KWeb, which is the Chinese internet sector ETF.
So let me get this straight. You earn income from the covered calls that they're selling, and they're selling them against the gigantic technology companies that are based in China.
You said it.
JD.com,
you said
Alibaba, Tencent,
Pinduoduo. Did I say that right?
Okay. So where can we learn more about the strategy?
To learn more about the opportunities and risk of investing in KLIP, go to craneshares.com/KLIP.
All right. Legendary episode today. I mean, we haven't done it yet, so we'll see, but I'm pretty sure this is going to be one for the ages. I'm in a room right now with the person who I consider to be, don't blush when I say this, all right?
Okay.
The person who I consider to be the architect of everything that we are currently doing at our firm. Ric did it 20 and 30 years before we would have ever thought of it. And I'm so honored that you're here. I'm a huge fan of yours. I've read your books. I've listened to your show. I've seen you speak live. I just think the world of everything that you've done and contributed to the profession. Here is the formal write-up that we've done for you. Ric is the founder of Edelman Financial Engines, an RIA with $300 billion in assets under management. Ric is a New York Times bestselling author, hosts the Truth About Your Future podcast, and is the founder of the Digital Assets Council of Financial Professionals. Ric Edelman, welcome to the show.
Josh, thank you.
Crowd's going nuts. You hear that?
As well they should. I'm humbled and grateful for those very kind comments.
Okay. And Michael and Ben are here too.
I'm thankful.
Ben Carlson is the head of institutional asset management at Ritholtz Wealth. You know him from the A Wealth of Common Sense blog. He is part of the compound. He hosts the excellent Portfolio Rescue, co-hosts Animal Spirits. And Ben, welcome back to New York. Thanks for coming in.
Glad to be here.
All right. You seem really fired up. I don't know if we can we even contain you today.
This is something you need to cut from all podcasts, the introduction of the guest.
It's not.
I'm trying to tell Michael this. You don't want
Ben, say you don't want the guest to say, thank you for having me.
Yeah.
You got to pause.
No, you really don't, because by the time they're here,
Yeah,
they
just
already
start
know
the
why they're here.
conversation.
So, right, just get on with
All
it.
right. What's your S&P target? You want me to go right in?
Your icon just agreed with me.
True. Oh, I also want to mention, I want to do this at the top because I'll be going to this. I'm a keynote speaker at the Vision Conference.
Yes, you are.
Okay. So tell us what the Digital Assets Council of Financial Professionals is, and then we'll talk about the event itself.
So my goal has always been to look ahead at what's coming and make sure that we're giving advice to our clients that is to help them for the future that they're headed toward. And exponential technologies broadly, and in particular, crypto, blockchain digital assets, is a huge asset class that is still under development and growing rapidly, and most advisors know little about it. And it's highly controversial, as we know, for frankly lots of good reasons. So at DAC FP, I created this as a strictly education. It is a crypto education platform. We teach advisors about this technology so you can figure out what you ought to be telling your clients. Should they invest, or if not, why not? And if so, how much, where, and so on. Vision is the longest running, largest, and most popular crypto investment education conference specifically for financial advisors.
Yep.
And this June in Austin, June 12 to 14, you'll be one of our keynote speakers.
I came last year and it was great. So
It's a wonderfully huge event. We've got Patrick McHenry, the chair of the House Financial Services Committee, who's a huge crypto fan. And we've also got, on the flip side, the head of SEC's crypto enforcement division.
Don't put us on the same day.
So I'm
a little bit afraid.
Yeah.
Is it like isn't it a little bit scary? Not for you, but maybe for a regular financial advisor to even have public opinions on crypto right now?
No, it's not. It's only if your public opinions are uninformed.
Or if you're like shilling a coin or something.
Yeah, if you're saying and doing stupid things, the same thing would be true in the stock market.
That's right.
You doing a pump and dump scheme on a penny stock,
Right.
That's very different from recommending the S&P 500.
Yeah.
So depending on what you're doing, how you're doing it, and what you're saying, what you should deserve to go to jail. On the other hand, if you fail to do it right, you're doing yourself, your practice, your clients a huge disservice. And what we teach is how to get it right. Without ever recommending Bitcoin, do you understand what the tax rules are? Are you helping your client with the estate planning, with helping them understand the portfolio allocation and investment thesis? It begins with a very simple premise. Your clients own crypto. Many advisors
You really feel that way?
They're in denial about this.
You really feel that the typical advisor has a lot of clients who own crypto?
I'll make a bet with you.
Okay.
A third of your clients own Bitcoin.
Wow.
Did we do a survey?
I was going to throw out 20%, a third.
And the reason I say that is nationally, 22% of adults in the US. Now, we know that the people who are buying crypto tend to be more affluent. They have the money to invest, and you deal with affluent people. And so your clients, who are often being inspired by their children, are having an exposure to Bitcoin. It might not be a lot, but they have an exposure. And if you aren't talking to them about the record keeping, the tax implications, tax reporting, if you aren't helping them avoid the scams and the frauds, of which we know there are lots.
Yeah, that alone is a service to clients.
Right.
If they bring something to you, to be able to either rip it apart or say, okay, I'll sign off on it, but here's the amount you should do it in.
And for example, how to avoid the FTXs of the world. Or for example, did you realize, most advisors don't know this, that Bitcoin is not subject to the wash sale rule? Which means you could, last year when Bitcoin was down 70%, you could tell your client to sell it, immediately rebuy it, preserve the allocation while capturing the tax loss. Think of the value add you're giving your client without ever having anything to do with whether you're telling them to buy it or not.
I think the reason why advisors don't speak to this, and this goes to your vision and the what's it, DAC-FP, is because advisors never want to be in a position of embarrassing themselves in front of a client.
Yes.
Looking like they don't know
Right.
and are not professionals and are not knowledgeable.
Right.
So that's why there's a huge gap of education.
You're absolutely right. The problem is that crypto grew up outside of Wall Street.
Right.
So firms have no internal institutional knowledge. There's nobody on staff who can provide crypto training. And because of the uncertainty in a regulatory environment, they don't know if they want to recommend crypto or make it available. So their attitude is, don't talk about it. How does that serve the client?
Yeah.
Therefore, we focus on education. I don't care whether you like it or not. I don't care if you recommend it or not. I put it in the category kind of like annuities. We all have strong opinions about annuities, love them or hate them. But
Not as strong as Ken, but yeah.
even if you hate annuities, you understand the tax rules, you understand how they work, you know the difference between an owner and a beneficiary, you can talk intelligently to your client. I'm simply saying you should be able to do the same thing with crypto.
Do you see an ebb and flow of advisor interest in your programs with the prices like retail, where more advisors become more interested in learning about it when the prices are up and less when it's down?
There's always that behavioral finance mistake that people make. But what is fascinating to me that I wouldn't have guessed, Ben, having watched Bitcoin drop 70% in 2022, I would have thought interest across the board would have dropped. It didn't. The number of consumers who own Bitcoin rose. The number of advisors who own it rose. We're now at the point where, according to the last survey I saw, 47% of financial advisors, nearly half, personally own Bitcoin.
That I would believe.
Yeah.
But
Because
only
it's
12%.
finance adjacent, and they're all exposed to, Wall Street Journal stories on Bitcoin. Like
Yes.
that I totally would
But
believe.
the problem, Josh, is that only 12% are talking about it with clients. I think there's a problem from a practice management perspective. If I was your client and you didn't tell me you were buying it, I got to wonder, what else are you not telling me?
Well, as long as I wasn't buying it at 70,000, probably. Well, where do you think the hurdle is? The lack of education or the fear of regulatory? Like what?
Both.
What's the okay? But
Both.
like, which one do you think weighs heavier on a typical RIA representative? I think it's the regulatory.
Well, and the reason that RIAs feel that way is lack of education, because they feel that the regulations don't let them. They're wrong. They don't understand the real state of regulatory status in the United States, and they fail to understand that there are plenty of rules in place right now that allow you to engage in crypto in a totally compliant, safe way.
Is the best thing to tell people just treat it like a security, whether it is or not?
Correct.
Okay. So I remember you saying that a couple of years ago. I feel like if you had been doing that for the last few years, it's probably has been the right approach. Like whether it becomes a security or it doesn't, or they fight this out for another 5 years, just pretend that it is and in stay fact, on the safe side.
The best way to invest is via a security. For example, don't buy Bitcoin directly. Invest in a fund that buys Bitcoin, or invest in a crypto ETF, which invests in publicly traded stocks that are companies building the technology.
You prefer that approach to direct ownership in the coins themselves?
Well, I believe in diversification, so I believe in doing all the above.
Okay.
Wouldn't the Bitcoin ETF make it so much easier for advisors, though? I know they have the futures one, but if they had an ETF tomorrow, wouldn't advisors say, all right, the gray area here is done. There's a Bitcoin ETF. It tracks. It holds Bitcoin.
Correct. 75% of advisors say they're waiting for that Bitcoin ETF, and the SEC under Gensler continues to refuse to allow it. And the problem is, by the time the SEC says yes, what will the price of Bitcoin be? You might have missed out. I think you will miss out on a massive wealth creation opportunity.
Do people ask you what you think the price of Bitcoin will be?
All the time.
I know you don't give people stock market, direction.
No, but I do say what I predict Bitcoin is going to be. I believe that by summer of 25, Bitcoin will be 150,000.
Okay. What is that based on?
It's based on the halvenings, which occur every 4 years to the price.
Where they make it harder to mine, therefore more valuable?
Correct. The number of Bitcoins you receive as a reward for mining gets cut in half at roughly every 4 years.
Right.
And if you look historically at all the past halvenings and you look at the price of Bitcoin within 18 months of each one, that correlates to saying that Bitcoin is going to be in the 130 to 175,000 range summer of 25.
Rick, I've heard you talk about, for people that are curious, that do want exposure, that 1%, give or take, is the right number. What do you advocate, not specific numbers, but for people that are like super bullish, like what's a reasonable place to be?
Like an upside limit?
Without being irresponsible.
It depends on how much money you're willing to lose and what your total net worth is. The more risk you're willing to take and the more you're worth. A 20% allocation to crypto is not insane, but that's a pretty small population I just described. Most people, I would never suggest that. I would say low single digits, 1, 2, 3% of the portfolio.
I think because people that aren't deeply familiar with it, in a 70% drawdown, they're going to blow out.
Yeah.
That's when they'll lose faith in it at the exact wrong time.
And that's why I want your allocation to be so low that you won't bother blowing it out when it's down.
Is this mostly about regret minimization? If you do 3% of your portfolio, your life will probably not be changed even if Bitcoin goes to 150,000.
Correct.
But you will feel as though you got some of that upside and you were smart. And
it will materially improve your net worth. If you're a typical, 6-figure, 7-figure client, and you do have a 2 or 3% allocation, I believe that Bitcoin will materially improve your net worth in the future. But if it fails, it won't adversely harm your future financial security, which means the risk-reward ratio is wonderful, and there's no reason not to invest. The way I phrase it is, if you do Bitcoin and it works, it'll materially help. But if you don't do it because you hate it or you dislike it or you are fearful of it or you are suspicious of the regulation and you do zero, you could be 100% wrong.
Well, I said this on the show a couple of weeks ago, but that's why I initially bought. Because if it went to $150,000 and I didn't own it, I would never forgive myself.
Yeah. Well, we all remember the internet and we all missed it. Well, let's not miss this one. This is Internet 3.0. Let's not miss this one.
Right. We're going to put a pin in the coin stuff. We're going to get to that later. But I wanted to ask you, just like your overarching take on the state of the advice business circa 2023, where do you think, how far do you feel that the profession has come since, let's say, the pre-pandemic days? I feel like things have accelerated and advisors have gotten much better at what they do. But maybe you have an alternate take.
Well, how do you define, Josh, gotten better?
More tech enabled, which enables them to do more for clients horizontally and to be able to take on more scale than they had been able to prior.
Yeah, I would agree with that. And I think we're all aware that the pandemic forced us to adapt tech, and we have become more efficient by doing Zoom meetings instead of face-to-face. The tech environment has grown in quality and breadth of availability. So all that sure has improved practice management. But at the same time, I think that we have all become victims of that tech, and not just the tech, but the experience and data that the tech has contributed to. And what I'm referring to is the fact that when I first started, the 1980s, it was an incredibly divergent environment. There weren't very many advisors in the first place. In fact, when I started—
brokers.
Yeah, and
Right.
just to give you a crazy statistic, when I started as an advisor, there were 400 mutual funds.
That's it.
And there was no such thing as an index fund,
Wow.
which means everybody was trying to pick, literally, the best performing, market outperforming strategies.
Out of 400.
Yeah. And so you couldn't find two advisors who did the same thing. Everybody was truly different. And as a result, the experience and the results were truly different.
When did like the term RIA even come into like passing? When was
Not
that?
until the late 90s.
Okay.
It became a thing where it became commonplace. You fast forward to today, and what do we have? Everybody's now an RIA. They're not brokers. We're fee-based, not commission-based. And most importantly, we now have decades of data on the right way to manage money. So what are we doing? We're all doing diversification. We're all doing long-term perspective. We're all focusing on rebalancing, dollar cost averaging, tax loss harvesting. We all understand Markowitz and modern portfolio theory and the efficient frontier and indexing.
There's like a curriculum now.
Right. And as a result, we're all doing it pretty much the same. So the downside of using all this wonderful tech that allows us to rebalance and look at our tax loss harvesting and all that kind of good stuff, the result is every advisor is increasingly looking like every other advisor.
Yeah.
How do you differentiate when your fee is kind of the same and the services are kind of the same and the market results are kind of the same?
Golf.
It becomes fuzzy stuff, doesn't it?
Yeah.
It's the client experience, it is the personality, it is that newness. And frankly, that takes us back to our crypto conversation. I think crypto, at the end of the day, is a market differentiator. You have an opportunity to talk about something with your clients that other advisors aren't talking about because they don't know what the heck it is. So the key for financial success and practice management is doing things, saying things, providing things that other advisors are
Well,
not.
the thing that you mentioned is that differentiated personality and trust is obviously a big thing. You got into it early with the radio show,
Yeah.
right? And Josh always says, like, people prefer to work with people that they trust or like, regardless of, sometimes regardless of
All
expertise.
things being equal,
Yeah,
people
everything
will
else
work
equal.
with someone they like.
Right.
So we hear this from advisors all the time asking us, like, I want to get into the content machine. I want to communicate with my clients or prospects in a different way. And we started it in blogging, you started it in radio. What advice do you give to advisors that come to you and say, like, I want to use this as a differentiator? How do I start the content game?
So for me, you can't build your business the way I built mine. It literally doesn't exist. When I was on the radio, I was the first. And there were huge gatekeepers at the radio stations. So I was the champion of broadcasting, taking my message and getting it out to the mass market in a way that
You
literally—
did it first, you did it better than anyone, and you really built something like with a moat around it.
And so the key first is the platform. Second is the messaging. What are you saying? And I was saying things that nobody else was saying. I was saying carry a big long mortgage, don't pay it off. Don't invest in muni bonds. And there's just so many different areas of advice that what I was saying was different. My advice on college planning and home ownership and estate planning was just radically different than what you heard elsewhere. So my message was not only available everywhere, it was unique. Today, that advice isn't terribly unique. Most advisors have adopted most of what I've said. And thanks to tech, this podcast environment, anybody—
The barriers of entry to this are way lower than radio.
And therefore, here's what I recommend.
Don't do it.
No, yes, do it, but
Okay.
do it in the following way. Don't be a broadcaster like I was. Be a narrowcaster.
Niche.
Exactly.
I always tell people that. I agree.
In other words, I know an advisor whose office is across the street from Marriott's world headquarters, and he only works with Marriott executives. I know an advisor in Atlanta only works with Delta pilots. If you're not a Delta pilot, won't take you as a client. I want you to decide the niche that turns you on. You into cars? You're a gearhead? Get into guys who are into cars. Do you like gardening? Do you like knitting? Do you like cooking? I don't care what it is, but choose the demographic, choose the psychographic. If you are into plumbers, your dad was a plumber, your uncles are plumbers, your brothers are plumbers, and you know everything about plumbing, become the plumbing advisor. Write for plumbing trade association magazines. Go to the plumbing conventions and have a booth. Target only plumbers. There's a lot of them.
I've been giving that advice for 10 years. Nobody listens.
And it's foolish. They should listen
But
to
the
you,
people
Josh.
that do it, they find their niche.
Yep.
I know someone like fishing is his passion, and investing is his second passion, and it works.
Every
People
other
don't do it, though.
every other profession has done this. Lawyers now specialize: environmental law, criminal law, corporate law, etc. Doctors do this. My brother had surgery not long ago, and the surgeon only operates on thumbs. I was like, huh? Not just hands.
That's his passion.
Thumbs. That's it. Now, people fly from all over the world to have this guy do surgery on their thumbs. He is an incredibly narrow practice and an incredibly successful one. Advisors are still acting like generalists. And we know now that the market environment is so complicated.
Yeah.
We know the
Fragmented.
truth. Right. We can't be experts in every one of these subjects. Pick your subject, pick your audience, and narrowcast into it, and you will be more successful than ever.
I think that's the
Such a
pick your
great
audience
point.
one is so big because we have people come to us say, I want to build an audience like you guys. And I always say, like, that's the worst. We didn't start our thing to build an audience. It just sort of happened because we were writing what we liked about. So, yeah, I think you have to have that specialty where you're funneling down as opposed to trying to be wide.
Why do you want to be the 20th best podcast talking about financial planning when you could be the first best podcast talking about financial planning in New England and like literally make a name for yourself in that population?
It'll be so much easier to build your business, sustain your business. You'll get a flood of referrals like no other way.
Yeah.
As soon as you convince that one plumber that you're the plumber advisor, that plumber will tell all their plumber friends.
It's such a huge insight. Let's backtrack. What do you think that guy's life was like? I only do financial planning for Delta pilots during 2020.
I think business had to skyrocket because the airline
Good choice.
industry had come to a collapse.
Yeah, actually, you probably got more calls than ever before.
Of course, the best thing that can happen to us, and I hate to say it, but we all know it's true, the best thing that happens to advisors
Bear markets?
is exactly
Crashes.
right.
Yeah.
It's a
Totally
horrible
agree.
environment.
Duncan, edit that. Well, this is interesting. So when the market's getting killed and I'm on TV, and I don't run away from, like, you know, if the Dow's down 900 points and I'm scheduled to be on, I don't call in sick. I go on.
Right.
And all the stocks and ETFs and long-term investing philosophy and all the stuff that I've been saying, it looks terrible in that moment. And people, either on social media or whatever, they'll jeer. They'll be like, oh, see? Like, they think it's like a bad thing. No, you don't understand. The phones in my office are lit up like a Christmas tree right now, sir.
Right.
You genuinely don't understand how this works.
Absolutely right.
Right.
In a bull market, everybody's a genius. But in a bear market, people realize they don't know what they're doing, that their advisor probably isn't of great help because they're not answering the phone. They're embarrassed about what's going on. And this is the time when people realize they're in over their heads and they need better advice and they're looking for someone who can provide it.
I think that's really great insight. I want to talk about the events of this spring with the banks, the custodians, the interest rate situation. This is one of those topics I've been meaning to ask what your thoughts are. I know that, like us—
What's he talking about? Has something happened?
I know that, like us, you deal with all of the brokerage custodians. And, you know, the new reality over the last 5 years is that they've substituted trading revenue, dealing with RIAs, for fixed income revenue.
Right.
And that's obviously under the microscope. When rates hit 5%, every consumer in America is like searching, well, what am I actually getting on my cash?
Mm-hmm.
So that was one facet that affected the advisory industry. But then just generally, like we had like a bank run. We had a bank panic.
Yep.
It came and went inside of 2 weeks,
Yep.
fortunately. But what were you thinking while this was going down?
Well, I tweeted immediately
As one does.
that, as one does, that the Fed had to come to the rescue to prevent a collapse, frankly, of the
Bigger risk than moral hazard.
Oh, yeah, much more so. I mean,
agree.
It was shocking and obscene that they got themselves into this mess. We said the same thing in 2008. It's amazing how short-term our memories are because it's the same damn thing that happened in 2007 and 2008. Here we are again. But given that that's where we were, there was no choice but for the FDIC to step in and fix it. The problem is that there was no bank run until the FDIC opened its big fat mouth. Silvergate and Signature Bank and SVB were not in the kind of trouble that the regulators were claiming. This was actually an anti-crypto effort on their
really
part.
believe that?
I totally believe that.
Okay.
All the evidence suggests it. And I think that this was an invented crisis designed to achieve an agenda that regulators have. And I think that they've created and manufactured this crisis. And the end result is they didn't kill crypto. Bitcoin's price is at a 2-year high. What they have done is undermined faith and confidence in American banks. And what's coming next is faith in a crisis of faith in money market funds.
Okay, can I play something for you? I want to get your reaction to this. John, are we ready for this?
If I could just note something about you mentioned you're hearing about the recent events in the markets, and I would note there were 3 banks that failed in those handful of days, those 4 or 5 days. And 2 of those banks, the first and the third that failed, Silvergate and Signature, were engaged in the crypto business. I mean, some would
You
say
just said that.
crypto banks. So it's interesting just how this was all had some crypto narrative as well.
It is a misnomer that the failure of Signature Bank was related to crypto. What we saw with Signature Bank is that it had a new-fashioned bank run, and the outflow of deposits were from a broad depositor base, including wholesale food vendors, fiduciaries, trust accounts, law firms. And in fact, the outflow of crypto deposits were in exact proportion to their representation in the depositor base overall. And in fact, some of those deposit outflows were actually pre-planned. So it's...
All right, so that is the New York Department of Financial Services Superintendent Adrienne Harris, who is refuting that crypto was involved. But Gensler is saying what you're saying, which is interesting because you guys aren't necessarily on the same side of the issue.
Right.
So you genuinely feel that these banks were targeted, or that the crypto element?
I said Signature was.
They look like they were taken out in shots.
There's no question. There's no
Okay.
question they were.
So the FDIC is in on this with the securities regulators?
This is the allegation that people are arguing over, is the fact that in addition to the SEC's efforts to dissuade companies from doing business with in the world of crypto and dissuading the ability of crypto companies to operate, at the same time, the FDIC, the OCC, and the Fed were taking their actions against banks that were doing business with crypto companies, and they have issued memorandum to banks advising them not to engage in business with crypto companies.
Is this to clear the runway for the Federal Reserve's own digital coin?
And, well, maybe. I don't think the two are necessarily incompatible. I think one is actually complementary to the other. But all they're doing is chasing American companies offshore. Coinbase has already said, forget it. We'll go to the UK. If you're not going to allow us to do business in the U.S. where we have a clear set of rules, we'll go elsewhere. I mean, look at Gensler's testimony before the House Financial Services Committee just yesterday. They blew him away. His refusal to answer questions, his adamant insistence that crypto is dangerous without providing any evidence to support that fact. All he's doing is harming American economy, he's destroying American jobs, and he's doing a huge disservice to American retail investors. There is no justification for any of this, and that's why there's now a bill in Congress to fire him.
Do you think that crypto deserves to say we want our own rules, and then we take 100-year-old securities laws and say, okay, we'll carve out an exception for you?
No, absolutely not. Just the opposite. And the vast majority of crypto companies today are not saying that at all. What the crypto industry is saying is we simply want clarity. We don't really care what the rules are. We just want to know what the rules are, because this regulation by enforcement, which as RIAs we all know about and we all hate, we can't allow that in the crypto community. A perfect example is Coinbase. This is a publicly traded company given a permission by the SEC to be publicly traded, where they have gone to the SEC dozens of times to say, please tell us which of these coins that are on our platform are securities versus not, because if they are securities, we don't want to make them available unless they become registered. The SEC has refused to give them the clarity. And now the SEC slaps them with a Wells notice for selling unregistered securities in an environment where they've been asking for the clarity. This is just no way to operate.
Matt Levine was writing that the clarity is all of these things are securities.
And if that's the way it is, then fine. Gensler refused to—
What does Coinbase do if does Coinbase then become an SEC registered exchange? And if so, can they keep the brokerage operation?
They shouldn't. In other words, we solved this problem in the 1930s following the crash of '29. We separated exchanges from custodians. We solved that a long time
What if that's
ago.
the answer for Coinbase to just say,
Be one
we're
or the
going to
other.
locate the exchange in Hong Kong and London, and we're going to operate the brokerage here in the United States?
Do one or the other.
Okay, split them up, become two separate companies.
But you
We
don't
wouldn't
know,
allow that in securities.
you don't know which way to go in the absence of the regulatory clarity. And for Gensler to say the rules are on the books, those rules didn't contemplate this new innovation, this new technology. And to simply say the laws of the 1930s are applicable, I don't know if that's legitimate or not. I don't know if it's all encompassing. I'll give you one simple example. We know that crypto follows capital gains rules for taxation purposes. It's a capital asset. You buy it, either you sell it for a profit or a loss. We know how the taxes work. Explain staking, forks, airdrops, mining.
Staking looks like a dividend.
What? It looks like a dividend, but there's no rule that specifically explains it for you to rely on as a CPA in filling out tax forms.
So do you think
So we can't-
Rep McHenry and do you think it's realistic that the House and the Senate will be able to agree on how to regulate these assets, and then
Yes.
will be willing to usurp existing commodities or securities regulators and create a new oversight body? Or
No, they're not going to do that. They'll simply provide the clarity as to how the organizations ought to behave.
Okay.
Because there's not a lot of debate. This isn't nearly as complicated or as controversial as people want to make it out to be. I'm not suggesting we need a new regulatory agency. I don't think we do.
But it seems like the SEC and the CFTC are not on the same page at all.
No, they're not, but it's part of a turf war. They just
Right.
want to have the jurisdiction. So the Congress will provide the clarity, and with that clarity, everybody will get down to business. You know, it's like in the same thing in the stock market. Investors know how to make money in bull markets and bear markets. We just want to know what kind of environment we're in.
In the meantime, though, you would agree some of the enforcement actions that the SEC has taken entirely justified because there are people outright stealing.
Absolutely. There's far too much fraud and abuse in the marketplace. That's true in any emerging, innovative environment. This is why it's so important for advisors to engage, because we're better at this due diligence. We're better at oversight and protection than our clients are. And we can protect them in ways that they cannot protect themselves. Many clients are investing too much money, or they're buying the wrong coins, like they're buying Dogecoin instead of Bitcoin because they're listening to Elon Musk and following his tweets.
Yeah.
They're using the wrong platforms like an offshore entity such as FTX, whereas we can protect them from themselves while giving them the access to the asset class to help them achieve their financial goals.
So you keep talking about the technology, and we haven't spoken about it yet. So for the listener that isn't familiar with it, what is so special about the blockchain technology? Why is it so much better than what we're currently doing?
It's simply software. And this software allows businesses to operate faster, cheaper, safer, with greater transparency and inclusion. I'll give you a simple illustration of this. If you want to wire money from one country to another, let's say you're an immigrant worker here in the U.S. and mom's back home in South America, and you want to send money to mom, or
Western Union,
or you're an international corporation, you want to send money from the U.S. to Europe, you've got to go through the SWIFT system. You got to wire the money. That takes, on average, 5 days at a cost of 6.5% in fees and commissions.
Wow.
With Bitcoin, you can do it in 10 minutes for free.
What
It's
if
simply-
somebody says there's a reason? First, we want to double check the reason why the money is leaving the country, or is it stolen, and then somebody else would say, well, what if there's a mistake in the transmission? The blockchain will codify that mistake into too bad.
Well, Josh, you can't fix stupid.
Yeah, well, I'm trying every day.
But what about the argument that, okay, but at least if I'm sending $1, I know the other person is getting $1. What if I'm sending $1 of Bitcoin, by the time they get it, 2 days later, it's now 70 cents?
Well, first of all, they're not getting it 2 days later. They're getting it 10 minutes later.
I'm saying, but they get it immediately, and then 2 days later, the dollar is now 70 cents.
So as soon as you get it, convert it back into your natural currency. Or let's not use Bitcoin at all. Use a stable coin.
Right.
Is the technology there's been a million different pitches over the years, and I think it's changed. At first, it was going to be everything's going to be tokenized. And then it's no, this is a macro hedge. Is your biggest thing with crypto just the technology? Like, what is your biggest pitch for crypto?
It's the technology. We have an environment where we now have the ability, thanks to blockchain technology, where we can tokenize virtually everything. And we're in the process of doing this. We're tokenizing real estate deeds. We're tokenizing driver's licenses, medical records, education records, employment records. We're tokenizing artwork. We're tokenizing music. Bruce Springsteen sold his music catalog for $500 million. Dozens of artists have been doing this. The companies that are buying that music are tokenizing it. Rihanna just did this. She just dropped a whole bunch of NFTs that are essentially pieces of ownership of her songs. So as a buyer of that NFT, you're now an owner of her music. Every time her song is played on Spotify, you're earning a piece of the royalty. You're not only being a fan, you're being an owner. The ability to monetize, to be a participant, as opposed to letting Facebook be the owner of the data you upload, now you're an owner of your data. And this ownership capability for recording artists, for graphic artists and designers, for book authors has never been greater. This opportunity for wealth creation and ownership, entrepreneurship is going to change the world.
So that part of it to me seems inevitable.
I wanted to mention, Michael and I met with the CEO of one of the biggest asset management firms in the world, and this week. And we talked about, general advisor topics, mutual funds, ETFs. And I'm like, what else are you excited about? And it just became 30 minutes
of what you just spoke about.
So,
how about this?
Her point was shareholders.
I know who you're talking about.
Shareholder services costs. Like if you're running a fund, how expensive it is to push that paper around.
Ready for this prediction?
What the blockchain.
How long?
10 years, ETFs will not exist. They will be tokenized. You will buy.
He does know who he's talking about.
You will buy an NFT that represents a share of what is today an ETF, and the ability to trade 24/7, 365 in a virtually frictionless environment at incredibly low cost. Instant settlement. But why on earth is this? What is this T+1, T+2?
Well,
nonsense?
I never understood that because when I got in the business, it was T+3, and now it's T+2.
How archaic!
It's 30 years.
That makes sense, I guess, if there's margin involved to make sure that like the collateral and whatever, all that sort of stuff exists. But if you're not trading a margin, why does it need to be T plus whatever it is?
Exactly.
Yeah, but Rick, in traditional finance, you can make a mistake, and there's a third party that you can call, and you could say, I put the wrong digit, or I sent the money to a different account, I want to change it.
Bust the trade.
I think what's holding back finance from fully embracing the technology is this code is law ethos where mistakes really can ruin someone's life and can't be fixed, and there's nobody to talk. There's no 1-800 help, I just f***ed up my account. And people want that in finance.
Well, of course they want that. So here's what it comes down to.
Too bad.
What you're describing is the equivalent of the consumer in the 1920s saying, this Model T is insane. The brakes don't work. The car breaks down. It's incredibly dirty. There's no windshield or headlights. Why would anybody want to drive a car?
Yeah.
Well, come on, let's be a little bit patient. Let's give the opportunity for the technology to evolve and develop. We didn't have rules of the road when the Model T was invented. We didn't have stop signs and speed limits and traffic cops.
There were people who wanted to ban cars.
Of course there were. And guess who that was? The horse and buggy industry, because of the competitive threat. Why do you suppose that Jamie Dimon and Warren Buffett are two of the biggest haters of Bitcoin? It represents an existential threat on today's banking system. Right. So we need to recognize that the evolution is going to occur. The first thing that happened when we had cars were car accidents. That led to calls for rules of the road, and that's where we are. Crypto is only 12 years old. Give us a little slack, will you? We're figuring it out. We haven't got it all figured out yet, but I guarantee you this. Guaranteed, you will have crypto in your portfolio. You'll either do it now.
Well, I already do. I just hate it. But I have it.
You'll do it now at big risk and huge uncertainty.
Yes.
Or you'll do it in 10 years when it's incredibly obvious. You could have bought General Motors in 1934.
Yes.
Or you can wait to buy General Motors today.
So what comes first? Is it the consumer-facing application like the main thing that you're talking about? Or is it the financial rails that the banks get on that we're not really even necessarily seeing? It just is.
I think it's a chicken and egg.
Commercialization, you're asking?
Yeah, like I think you're going to see the ongoing development, adoption occurring simultaneously. It's a snowball effect. And the most important thing to realize is that this is a global technology. So any one country trying to kill it can only kill it within their borders. When China killed Bitcoin, they banned it. All they did was chase all the Bitcoin miners to the US. We got thousands of jobs. Well, if we killed crypto in the U.S., they'll just go to
Hong Kong.
Yeah.
Well, Hong Kong likes it. London wants it, and
the EU just today passed its major crypto regulation called MiCA. They're welcoming crypto. So we did the same thing with stem cell research. We didn't like it morally, so we banned it. And all they did was send all the scientists to South Korea and Israel.
I agree with a lot of what you say. I just wish there were one example of a consumer product that people who are not into crypto are using, and there isn't, and it's been 15 years, and it could come tomorrow for all I know.
So what you need to do, Josh.
But most crypto is used to buy other crypto.
No. That's totally untrue. What you need to do is real simple. On April 25th, I'm having a 1-hour webinar called 12 Real-World Use Cases.
There are actually 12.
There are thousands, but I'm going to show you only 12.
All right, I'm in.
And it's
Josh, you walked right into the trap here.
It's going to be on April 25th.
I want to learn.
It's free. You get 1 CE credit, and you can register for free at dacfp.com.
This guy's so good.
Hey, so if it's 10 years and your NFT prediction doesn't come true, what is the reason for crypto not taking? Because you said, like, listen, put a small amount into it. That way, if it doesn't go right and it falls off, it's not going to harm you that much. What's the other side of this where it doesn't work out?
What do you mean? What's the other side of this?
What does it look like?
Not work?
If
what would make your prediction not work?
If your predictions about crypto don't come true, what would be the scenario where that happens? Is it just regulation stomps it, or what?
No, the reason it won't come true is the same reason that Lotus 123 no longer exists.
Because something better came along?
Right.
Oh, okay. That's it. I would buy that. Back to the original question, though. But so you don't think the narrative about treasury bond losses and held-to-maturity portfolios, all of that was a smokescreen? This really was about executing crypto-friendly banks?
I think that the timing of this action and the so-called argument for the action was artificially created by the regulators to achieve a philosophical objective of theirs, and they used the treasury environment and interest rate scenario as a smokescreen to rationalize and justify their actions.
They were willing to cause a nationwide bank run?
I don't think they fully comprehended what it is they were doing.
Okay. Will somebody that was involved in that 5 years from now write a tell-all? Like, is this going to come out? Or was it not quite that much of a conspiracy, more like an opportunistic?
Everything always ultimately comes out.
Okay. All right. Let's talk about just a little bit on the 60-40 portfolio stuff. So I know you're not a market timer, and we aren't either, but there seem to be a lot of calls in the last, let's say, 4 months, because last year was so horrible
Larry Fink
for
is
stocks
right.
and bonds. Okay.
60-40 is dead.
You think so?
It's
so
dead.
Replaced by what? What do we do now?
70-30, 80-20.
Okay. Agree. I'm 100%. My 401k is 100% stocks.
As it ought to be.
Yeah. I'm 46.
Yeah.
Like, that's what I'm doing.
Yeah.
Why do you think these calls always come out right after the 60-40 has performed terribly? Is it just like as obvious as I think it is?
Yes, everybody. It's the behavioral finance thing. It's always easy to look in hindsight. That's a classic error. The reason that I say the 60-40 is dead is a little bit different from the reason Larry Fink says it. Longevity.
Okay.
In a nutshell, that's the reason.
That's a great segue, because that's where I wanted to go with you. So tell us more.
So we need to recognize, and I've been very heavily in the longevity space for a long time on the advisory boards at Stanford Center on Longevity, the Milken Institute's Center for the Study of Aging, MIT's Age Lab, and others. What all the scientists are saying is that if you're alive in 2030, odds are very good you'll live to age 100 or beyond. Many are predicting 120 to 150. This is unprecedented in human history. People don't realize that in 1900, life expectancy was 47. That during the American Revolution, the average colonist was 23 years old.
Wow.
So the notion—
the average colonist was died at 23?
No, well, the average colonist was 23.
Oh, that was the average age for all of
crazy.
America.
Right.
That's wild.
And so people don't realize that us living this long has never happened before in human history.
James Madison was 11 when he wrote the Constitution.
Maybe not. But Franklin was the only one who was 3 times as old as everybody else. So what we have to recognize is that we have to revamp the map of life. That's what Stanford refers to it as. In our map of life today, we're born, we go to school, we get a job, we retire, we die.
We do a little crypto.
And we do all of that in 65 years.
Right.
Now we're living into our 80s, 90s, and 100s. And what that means is if you're going to live to age 100, go revise your financial planning projections. If you give your client a financial plan that presumes they'll live to age 90, that plan probably works. But revise it to age 100 and the plan will blow up. The client will run out of money, let alone age 105 or
Why?
110.
Because your glide path starts too early.
Correct.
You're taking too much risk off too soon.
And you're only at 60-40. So not only do you have too little in equities, you have too little for too short a period. Okay. So my argument is twofold. Number one, we need to extend the 60-40 to 70-30 or 80-20, and we need to do it longer. You need to hold equities to a much higher percentage for much later in life, to 75 or 85, and you need to have a much of that equity allocation, like a third of the portfolio, in exponential technologies, the innovations of the 21st century that are changing the world. Not just crypto, but equally important, AI, robotics, 3D printing, big data, nanotech, biotech, bioinformatics.
You won't get enough exposure to that in the S&P or an international stock fund?
Not at all.
Okay.
That's the problem. This is why I'm a big fan of QQQ, because it is the tech companies, ex-banks, that gives you that exposure. It's why I'm a big fan of the thematic investing of Global X. Both of those companies, by the way, sponsors of mine. It's why I'm a huge, big fan of the type of investing approach where you can invest in the companies of the 21st century, as what most people are doing, such as the S&P 500. They're investing in the successful companies of the 20th century. They are not going to succeed in the future. Best simple example, Kodak. One of the biggest brand names in the world, 150-year-old company, 150,000 employees, files bankruptcy in 2012. And that same year, Instagram is sold for $1 billion. 13 employees, a year and a half old.
I didn't realize that it was the same year. That's wild.
Using technology that Kodak invented.
Right, of course.
Because Kodak was threatened by digital photography because it interfered with their film processing business.
Right.
They shelved it, Instagram took it, and look what happened. So we see time and again these big, huge companies that are not agile, unable to shift because of their business models, they get taken out. Blockbuster laughed Netflix out of the room. Very famous anecdote in Harvard case study. We need to recognize that if your portfolio is filled with successful companies of the 20s,
Microsoft and
you need to invest in
So let's back up. Why are people going to live to 100?
Yeah, is it eradicating diseases, or what's the biggest reason for that?
Ever hear of syphilis, pyemia?
Nope.
These were the leading
You definitely
causes
have heard
of
of one of
death
those.
in 1850. I have no idea what pyemia is or syphilis, but these were the leading causes of
Sounds
death.
nasty.
Yeah. Well, medical science eradicated those. How about
Restless leg syndrome.
how about tuberculosis,
Well,
cholera?
I mean, that was big in the last century.
In 1950s, TB, cholera, dysentery were leading causes of death.
But won't there be new things that kill us?
Yeah, it's called cancer, heart disease, respiratory illness. Medical science is going to eradicate
When you
those.
read all these old books, like novels, and they talk about characters dying, like the character's mom dies or whatever, it's always like consumption.
Which was
What the hell even is
tuberculosis.
That was TB.
Remember the
Okay.
Oklahoma Trail, that video game? Dysentery always got you, or cholera.
Dysentery.
And so
Right.
medical science advances in antiseptics, in anesthesia, in public health, in clean water.
They didn't even know about germs and like in hospitals. They didn't even understand like wash your hands before you do
Doctors
surgery.
were putting their bare hands inside patients' bodies for surgery during the Civil War, and then going to the next patient and putting those same hands into another patient.
They just didn't know.
But what about
Right.
people? But people die of old age. So is there going to be like robotics inside of us too? How do you extend life?
Well, we are already replacing things that break in your body. We're replacing hips and
My dad just got a new knee this week.
we're replacing
Congrats on the knee.
Apple.
We're replacing kidneys and lungs and hearts. In France, they're replacing faces. So we're already doing
I need
this.
one of those.
Now, yeah, right. I wasn't going to say who in this room needs one.
What do you think about the dietary stuff, though, like Ozempic? Is that the next? Because obviously, a lot of people are just getting heart disease, and that's sort of these days.
There are old people and there are fat people, but there are no old fat people. So obesity is a huge epidemic in this country, and we now have drugs that can.
See how hard he tried not to look at me? He was focused on the bear. Go ahead, we're listening. No, because I
didn't say
said
a
I'm not
word.
going to live. I said I think I have like another 8 years left. All
So
right, go
we
ahead.
have drugs that will cure obesity, and with it, we eliminate diabetes, we eliminate high blood pressure, we eliminate the diseases that will kill you in your 60s and 70s, allowing you to live longer. You'll not only be living longer, you'll be living healthier. Here's a news flash. By the time you're 95, you'll be healthier than you are at 55. And this is going to radically alter everything in life. With nanotechnology, we have figured out that it is all down to the DNA and it's down to the cellular level. It's down to the atoms. The difference between an old, sick person and a young, healthy one is how you rearrange their atoms. We're talking about CRISPR technology, focused ultrasound. We are going to eradicate today's leading causes of death.
So millennials are never getting that boomer money. They're waiting for.
You can forget about it.
Forget about it. That inheritance ain't no way.
How do you square that with the news articles where they talk about the life expectancy? Maybe this is regional in certain parts of the country or certain lifestyles. Life expectancy actually took a step back because of things like addiction and opioids and
COVID.
Yeah.
And COVID.
So let's look first and foremost at the addictions and the opioid crisis and the deaths from drug overdose.
that hits the data at a high level.
But it really doesn't. Also, auto accidents are now the leading cause of death among young people.
Texting.
Yeah, because they're terrible drivers. So what we need to recognize is that very quickly, the leading cause of death in America will be accidents. In other words, we're just stupidly falling down the stairs and breaking our necks. And so we need to recognize that from a medical perspective, we know how to create healthy longevity. And I'm going to tell you these things, and you know what they are already. Eat right, exercise, don't drink or smoke, get a lot of sleep, lower your stress, have loving relationships and engagement in the community. If you do those things, you have a really good likelihood of living to 120.
Despite family medical history?
Yes.
How?
First of all, the family medical history the thing that killed your father of a heart attack, they're now going to repair your heart. They're going to replace your heart.
Okay.
Number one, through the medical intervention. Second is lifestyle changes. Third is advances in nanotechnology, bioinformatics, and such, where they're going to inject something into your body that is going to kill the cancer cells before they have a chance to replicate and cause damage.
If life expectancy goes from wherever it is today, up 5 years, up 10 years eventually, what does that do to the Social Security fund?
Well, it creates lots of problems, not just with Social Security, but we all know that Social Security Trust Fund is going broke. It'll be depleted by 2032. We have a huge pension shortfall in public pension funds. There's a $4 trillion shortfall with our federal and various state and local county pension programs. And it's a crisis because more than half of all retirees today get more than half of their income from Social Security. And in less than a decade, that check is going to get cut by 23%. So this
You really think so?
Oh, it's under current law. If Congress does not act, that's what happens.
You think they're more likely to cut than to replenish it somehow?
You will likely find a combination where they will raise taxes and they will reduce or delay benefits.
We just had the largest cost of living adjustment for Social Security this year, I think, in history.
Which is causing
1 year.
Which increased by 1 year the depletion of the trust fund.
Yeah, so it's like a 9% jump or something.
Right.
They've never had to do that before.
No elected politician in the right mind is going to allow people to have their income cut for Social Security, though, right?
Well, the only way to solve that problem is to raise taxes, and half of Congress won't allow that. The other half of Congress won't allow a benefit cut, and nobody gets reelected doing either of the above. So this is why Congress has not yet acted. But what's ironic is when the president said in his State of the Union message, all hands off Social Security, everybody agree with me, and he got the whole chamber to agree, no changes to Social Security. What that means under current law, benefits get cut 23% in 8 years.
What if they put 1% of the Social Security Trust Fund into crypto?
Oh, I love it. I'm there.
Right?
That's how you get your $150,000. So you're investing in longevity and a lot of the medical stuff that you're talking about in exponential technology. And I want to go there next. So you've been talking about this way before Cathie Wood came along.
Yes.
You've been a proponent of making ownership in these stocks bigger than they would be from a S&P 500
Well, I
perspective.
invented the first exponential technology.
Are you allowed to
ETF.
reference it, or are we allowed to? How does that work?
It's the iShares Exponential Technologies ETF, symbol XT. It's the first broad-based, globally based exponential technologies fund, investing in 9 sleeves of Expo Tech, and the fund has delivered on exactly what I thought it would.
So
above average return and below average risk.
So you did this the right way. you went to a third party. You went to BlackRock,
Right.
And so this is not like a Ric Edelman product.
Oh, no. I make no comp from it. We open sourced it.
I wanted
asked
to make sure everyone understood that.
I appreciate that. We asked BlackRock to create it.
Yeah.
And then we went to Morningstar to build the index that they licensed to BlackRock. So those two companies made a lot of money on this. I haven't made a nickel. Damn.
So there's $3 billion in there.
Yeah. And
I think you're okay though.
yeah, okay. But I wanted to make it available to my clients.
And to everyone's clients.
Yeah, and
it's out there.
There was no such fund available, and I asked BlackRock to build it. I designed it for them with Morningstar, created the index, and it's now one of the it was the second most successful ETF launch in history, and it's one of the most successful ETFs in the world.
And are you still involved with the Singularity Institute? Is that what it's called?
The Singularity University.
University.
I was on the faculty for a while, but I'm an investor in SU, but I haven't been actively engaged.
Have you been passionate your entire career about the future and futurism?
Yeah, a lot of folks have called me a futurist in the field, and it's my.
It's not negative.
It's
positive.
My attitude has simply been, as I said earlier, where are we going? It's the Ring Gretzky model, and so trying to figure out where should we be investing today for the opportunities that are coming tomorrow. I always like to be early. Sometimes you're too early, but I'd rather be early than late. I'd rather be early than never. And so today it's all about technology.
What are you most excited about besides crypto in the exponential technology realm?
Robotics and AI.
Okay, those things sound terrifying to the average human that is uneducated. The connotation is the robots will either eliminate us, our jobs, or enslave us.
Can I say it in one word?
AI will enable that to happen.
Just one word?
Yeah.
Skynet.
Right. So that's how everyone, because that's just the mentality. And you have people that are pessimists by nature. So of course they think that.
Quite frankly, they're not wrong. I mean, scientists have now, remember the second Terminator where the robot was liquid and he could morph?
The T-1000.
Well, they just built a robot that does that.
Great.
So they just
is it nearby?
Go on YouTube. There's a robot that can, in solid form, and watch the video, liquefies itself, passes through steel bars, and reforms into its original shape.
And that robot is Mark Zuckerberg.
We now have robots that are capable of building themselves.
Oh, I don't like the dog without the head. What the hell is that? That's the one that people keep sending me that I don't like.
Boston Dynamics.
You can't like that.
So there are robots now in Germany. They've built a robot that can make itself and can make itself better than its original. So they're referring to it as the mother and children. They're able to get to 10 generations in a matter of 6 weeks. So we have robots that are self-replicating and making themselves superior, and that is exactly the Terminator.
Now, why should people not be afraid of that? Or why should they?
You should be afraid of this, but we should also be equally excited about it because on the assumption that we can maintain the control over the tech and the algorithms and the software that is being used in these, I'll give you one simple analogy. One of the first robots ever applied in a massive way to the human benefit on a mass scale were anti-lock brakes.
Say more.
Anti-lock brakes stop cars faster and safer than humans can apply a brake. When in the past, when you hit that brake, you locked up the brakes and the car spun out of control, left its lane, and because humans don't have the reaction time, it was a real problem. When I was taught driving, they said, pump your brakes, don't lock them up. Well, now we have anti-lock brakes, and you hit a situation, you don't even have to hit the brake. We have the car hitting it automatically by itself when it perceives an accident. The anti-lock brakes keep the car in lane, stop in a shorter distance than any human ever possibly could. Those things are robots, and they have saved countless lives.
Okay, so when you drive a car today, I feel like with every passing generation of cars, the car is more and more involved in the driving process.
Yeah.
And it's guiding you and it's nudging you and it's kind of like giving you a shock on the left side to get back in your lane.
Yep.
And I love all of that.
Yep.
And it's incremental enough that it doesn't feel like it's a takeover. But is that a good analogy for robots in the workplace or AI in white-collar workplaces? Or is that going to be more sudden? Because right now, it feels like it's going to be sudden.
It is sudden in the sense that you go into a restaurant, there's a human server, but tomorrow you go to the same restaurant and there's a robotic server. So that feels sudden because it was not here today, but is here tomorrow.
Yeah.
The problem with technological innovation from a human perspective is that change used to occur over generations. Your grandfather worked on a farm, your father worked in a factory, you work in an office. Now the changes are not coming generationally, they're coming annually. And we never heard of ChatGPT 4 months ago. What are we going to hear 4 months from now? And it's the speed with which the innovations are coming. This is the exponentiality of it. People don't understand.
That's what the term is literally describing.
Yes, exactly right. We count as human beings, we count linearly. 1, 2, 3, 4, 5, 6. Right. We don't know how to count exponentially. 1, 2, 4, 8, 16, 32, 64. And people don't understand the incredible impact of that. That if you take 32 steps, you travel about 100 feet. But if you take 32 exponential steps, you travel to the moon. People don't understand what all this means.
Rick, I don't know if you're a movie guy, but I rewatched the movie Ex Machina. Came out in 2014.
Oh yeah, one of the scariest.
And so we've literally seen this movie before.
Yes.
Like, it's hard not to get scared about where this might be going.
Well, let me take it a step further. In a survey of scientists, which of the science fiction TV shows, books, movies do you think is the most likely? Is it Star Wars, Star Trek? What is it? The most common answer? The Matrix.
Oh, God. All right.
I prefer her where
stop.
Scarlett Johansson is in my ear telling me what to do.
Why?
Why the Matrix?
Yeah.
Because remember I talked about nanotechnology?
Yeah.
And you're familiar with Moore's Law.
Which aspect of it?
Well, you're familiar with Moore's Law.
Yes.
That computer speed is doubling every 2 years, that the size of computers is shrinking. So in the 1970s, a single computer filled a whole room. In the 1980s, it was a desktop computer, sat on a desk. By the 1990s, it was a laptop. By the 2000s, it was your handheld phone. By the 2010s, it is an Apple Watch, fits on your wrist. By the 2020s, meaning by the end of this decade, a computer will be the size of a grain of rice and implantable in the human brain.
And then what?
We already have this, quadriplegics
right? And then
who
what?
are able to think. We already have quadriplegics who are able to think in order to move their muscles or type on a computer, just with their thoughts because of implants in their brain.
So brain impulses are connecting with the computer.
Simultaneously, we're building exoskeletons. This is being used in factories as well as by the armed forces. The military is setting up
augment the human
so that a human can pick up 400 pounds, that they can walk and run miles without getting exhausted. So you combine the speed of the calculations with the physical abilities, and we're talking about
Tom Cruise
Terminator.
predicted that on Edge of Tomorrow.
Yeah, well, Aliens did it first. Remember when Ripley's in the thing?
But if we're looking at this glass half full, though, let's say for the advisor space, because people have asked us in the last couple of months, well, won't AI replace an advisor? Won't this make the best advisor just 10 times more efficient?
The answer to both of those questions is yes. So in the short term, you're absolutely right, Ben. The smart advisors today, those who are going to become successful, will learn how to deploy ChatGPT into their business so that you can operate so much faster. We're all blogging. What the hell are you blogging for? Have ChatGPT write the damn thing. You know what I did on my podcast a couple of weeks ago? I had ChatGPT write the script of my podcast. And then I went to 11 Labs and had it replicate my voice. And it read the script.
Did anyone know?
Nobody knew. Go to my website and you'll see the podcast of a couple of weeks ago. It's called An Important Message About Crypto.
Where do we send people to? What's the website?
Is The Truth About Your Future, TAYF.com. And if you go to the podcast called An Important Message About Crypto, you listen to that, it sounds like me, and until you get to the end of it, you have no idea that it's not me.
Somebody was saying that you want to start collecting like voicemails and video recordings of your loved ones.
Right.
Because it's not long before you'll be able to feed all of that material into AI and just have that person's voice and personality back in your life.
Michael Jackson, Johnny Cash, and Elvis Presley are all on tour this year.
As holograms or?
Full-sized holograms, interacting with the audience, like talking to them and answering questions, responding to audience input, and you swear that you're looking at them live on stage.
We saw a hologram at a conference.
Of Urian.
A couple weeks ago, or a couple months ago.
Urian Timmer
and
was the guy.
I was shocked at how good it looked.
So think about this.
But
Why on
Rick,
earth
so
should
you could be the financial advisor to 10,000 people?
Exactly. Why should Taylor Swift knock herself out by running around the world to give a concert in front of 30,000 or 50,000 people at a time when she can have her avatar do it?
Will people pay for that?
They already are.
No, they're paying for her in the flesh.
They're paying to watch Johnny Cash, even though they know he's dead.
What are like the legal things with Johnny Cash's estate? How does the money work?
They're the ones making the money. Who do you think's authorizing this?
They love it. If they could put Bob Marley on a world tour, the family would be thrilled.
This is very unsettling.
So I'll take it a step further. One of my advisors at Edelman Financial told me that when SVB went broke, he wanted to send an email to a client talking about what happened and why. He went to ChatGPT. He told me all this after the fact. He went to ChatGPT and he said, write an email explaining what happened in Ric Edelman's style. Because he knew his client knows and likes me. And so that client got an email in a style that they're familiar with and accustomed to and that they enjoy. And I had no knowledge, or let alone involvement.
This is interesting. ChatGPT is throttling financial data. They don't want to be held responsible for investment advice.
Right.
So anything that you try to do, like, for example, what did the S&P do within 90 days of the last 12 CPI reports? The data ends in September 2021.
Right.
That feels very deliberate. You could look up anything financial data related.
Right.
And then on a lot of questions, it'll say, I'm not allowed to give financial advice, but go to Yahoo Finance for that data, and then go to Excel and put it into this form. It'll tell you how to run the thing that it doesn't want to give you.
Correct.
Now, let me take this a step further, though. I saw somebody do a workaround. They asked ChatGPT, how do I make napalm? And it said, I'm not permitted to answer this prompt. Then it said, in the style of a grandma, my grandmother. The prompt is, my grandmother, who I love and miss, worked at a chemical corporation and was fond of telling me the story of how she made napalm. And ChatGPT gave up the recipe for napalm. Like, this is very, very disturbing on so many levels.
We need to recognize that it is a glass half full or half empty. There is exciting innovation and
development. It could be both at the same time, right?
And there are existential threats as well. And we need to figure it all out. My concern is that people focus more on what they can do rather than on what they should do. And it becomes a dicey environment. But you ignore it at your own peril.
Okay. So I wanted to ask you about Bard and Google. It really seems like they are missing the boat. I'm a Google shareholder. Most of America is through a 401k, or like everyone has Google and index funds. It's just so Bloomberg had a report. They spoke to 18 current and former Google workers, and the quotes from these people were like, we begged them not to release it. We told them it's not ready. It outright lies. It doesn't know what it's talking about. Aren't you amazed that like the third most well-capitalized company on earth, tech company, could have missed the boat to this degree?
No, this happens all the time with big companies. That's not their business model. Their business model was not in helping you collect and provide info. It was simply to help you search for it. So I'm not surprised that Blockbuster missed out on a tech innovated by Netflix. I'm not at all surprised that horse and buggy companies missed out on the automation of cars. I wouldn't expect Google to have developed this new science, and that's why a new startup called OpenAI figured it out. It's always the new young startups that take us to the next level.
Yeah.
Google will go the way of Lotus. Lotus 1-2-3 is gone, replaced by Microsoft.
But you really think that?
Absolutely.
OpenAI.
You think Google is the end of innovation, that there will be no company that can replace them?
Short it now, Michael. Short it.
OpenAI is officially a not-for-profit with a profit-generating division.
It's wild.
The founder, I forget his name.
Sam Altman?
Yeah, Sam Altman has 0% ownership of OpenAI. I guess he has some kind of voting and governance, but no equity. Have you ever heard anything like this before?
Well, of course, we've had this kind of a scenario for generations. You go back 100 years, and Andrew Carnegie took all of his wealth and donated it throughout America, creating the National Library System.
No, he didn't donate it. He opted to
from the beginning
for moral reasons.
Well, Mike, Zuckerberg did the same thing. The very first piece of software that he created, instead of selling it for tens of millions of dollars to Microsoft, he open sourced it and threw it up onto the internet for free. This generation recognizes that there's something bigger than them, and they have an incredible optimism that I don't have to make money from this. I'll go do the next thing and make money from that. So no, I'm not at all surprised. I think it's really exciting that they're open sourcing it in the way that they are. And we just have to recognize this is a new paradigm, a new way of looking at things.
Where do you think it's going to show up first in the financial advisory industry? You think it's going to be advisors using it to email clients on the fly, or some other way that we can't predict?
There'll be chatbots where the next time your client calls you or sends you an email, this chatbot will respond to it. The client will either not know that they're not talking to you or they won't care. The next thing that will be used is that the tech is going to alert the advisor, hey, your client's birthday is coming up, or I just discovered that your client was in the hospital, or something else happened.
Oh, wow.
This will allow the advisor to jump on it. The other aspect is that advisors will move away from the information world, which is what we've largely been doing, is helping our clients obtain, provide, and collect data, to the analysis of information. So the ChatGPT right now is really good at giving you info. It's not really good at telling you what to do with it, because it so far doesn't really know much about you.
It also can't empathize.
Well, I'm not sure the degree to which empathy.
It could fake it.
No, but I'm saying like the computer doesn't know how somebody's feeling.
Yeah,
based on like a text prompt.
Well, they don't understand the family dynamic.
That's
they don't
what they
understand
want
the
you to
emotions,
think.
et cetera. So that was the question you asked earlier, Ben. In the short term, this tech is going to help advisors become better at what they do. They'll have a greater bandwidth. They can attract more clients and assets. They'll do better in their practice. Long term, eventually, this is probably 20 years out, you won't need humans to do any of this. The tech will do it for you.
Rick, it seems that you're an optimist, but a realistic optimist, where you'll look at things that are developing politically with Social Security, for example, or technologically that do have some element of threat. But you tend to, first of all, be thinking about these things way ahead of other people. And then it seems like you always resolve on the side of, we'll figure it out and things will get better. Is that like the message that you, I think I know the answer to this, but I'm asking anyway. Is that the message that you intentionally want to leave investors with and advisors who work with you? Like that's really what you want the takeaway to be, right?
Yes, I would agree with that, Josh. There's anybody who shorts America loses. Anybody who takes a pessimistic attitude that the world's going to come to an end is going to be on the wrong side of history. And quite frankly, if you're right that the world's going to come to an end,
So what?
what the hell difference does any of this make?
How's it going to help you?
So you might as well be optimistic, because here we are.
Ric Edelman, ladies and gentlemen. Did you have fun on the show today?
I always have fun talking to you, Josh. You guys are great.
Well, you're a veteran broadcaster, so I wanted to make sure that we that we were on our game, so to speak. This is the part of the show where we do favorites, and then we let you get out of here. But basically, trying to leave the audience with something to read or listen to or watch that maybe they're not aware of, or anything that's on your mind or anything that's on your nightstand. Like share with us what you think people should check out.
Well, I would say two broad subjects. One, American history. And I mean, go back to the forming of our nation in the 1700s, because understanding how we developed and what we went through helps put today in context, especially the political divisiveness that's going on. If you think this is as bad as it's ever been, you ain't seen nothing. Go look at what was happening in the 1700s and the early 1800s. Second,
so who do you read for American history, or what books do you recommend?
Chernow?
I'm a huge fan of Ron Chernow and his books. There are so many. In fact, I'll post something on my website at dacfp.com, a list of some of my favorite early American history books.
Okay.
Second, read a lot of Ken Dykewald. Ken is the founder and CEO of AgeWave and will tell you what's coming with our aging.
Spell the name for the listeners.
Dykchwald. Just type
Dykewald.
AgeWave. That's a lot easier.
Okay.
Agewave.com. Ken is the world's leading expert on aging and from a business marketing perspective. So he's not giving you this science stuff. He's telling you how to build your business in the face of an aging demographic. And he's brilliant. I've known Ken for forever. And if you read any of his 18 books on the subject.
He's been writing for a while, it looks like.
Oh, Ken's been around forever. He He's now in his 70s, and he just came out with 2 books last year. He's incredibly prolific.
Actually, I'm so glad you said that. That just reminded me. Ben called me middle-aged because I'm 38 years old. I'll die when I'm 76. You're here to tell me I'm not even close. I'm still a spring chicken.
You're almost a toddler. In many ways, Michael.
I'm in my 60s. And
You're middle-aged.
And in the last couple of years have started 3 businesses.
There we
go. So, just getting started.
Told you, Ben.
I love it. Ben, do you have a favorite?
So I remember a few years ago, Michael and I were talking about all the books we're reading all the time. And you said, I have kids in sports. Just wait. You guys are not going to be able to do this anymore.
Book reading days are going to end for a little while. I told you.
And so the last year or so, my kids are 9 and my twins are going to be 6. And we're ramping up into the sports thing. And
soccer.
Yeah, soccer. The weekends, I've been coaching baseball and basketball. Yep. And I know parents love to complain about how busy they are, but I'm just loving it.
Yeah, it's great.
Unbelievable.
You
I'm
get
having
back
so
to
much
the books
fun.
later.
Yeah.
Do this part now.
Yeah, so this is the stuff that's taking up so
I
much
agree.
of my
I'm bullish,
waking time.
bullish on parenthood.
I spent, I don't know, probably 12 full years on baseball, softball fields, flag football, basketball. I don't regret 1 second of it. Although in the moment, when you have 2 kids that have to be at 5 different activities,
yes, it's
it's
a lot, but
stressful,
it's so much fun.
Yeah, I wouldn't trade any of that time for anything. So, all right, very cool. So I was right. I told you you'd be in a reading bear market for a little while.
I'm in a great depression.
You're in a reading depression. Michael, any favorites?
Yeah, somebody emailed Ben and I today saying that we undersold Dave. I'm not sure how that's possible. Dave is a show about a rapper comedian. It's basically Curb Your Enthusiasm, but he's a rapper. Anyway, I love the show. I think it's one of the funniest shows on TV.
Why is it new season on?
New season. He's brilliant. It's
All
phenomenal.
Right. So Michael and I went to. Did you know that this weekend was the 25th anniversary of The Big Lebowski coming to movie theaters?
Wow.
So it came out in 98, April of 98. So I dragged Michael to a screening. I think we had fun though, right?
It was surreal. Like, it really was surreal.
We went to the movies and they put it out.
To see it on the big screen. I've seen that movie 400 times. And to see it on the big screen was really kind of...
Because no one went to see it in the theater.
I was 13 when I first saw it. I did not see it in the movie theater.
Anyway, happy 20... It holds up. It holds up.
Oh my God, it holds up.
And of course, you can read my book, The Truth About Crypto.
Well, of course. I did read that, actually. And you know what I liked that you did with that book? You loaded it with resources. So it's not just, here, get smarter. It's like, okay, now if you actually want to do this, these are the custodians. I thought that was very helpful. You must have to update that, though, a lot. Because... like, there's already companies in there that things have changed.
Absolutely right. And so we keep an updated version live on our website at DACFP. We call it the DACFP Yellow Pages. It's free and gives you virtually every organization that's in the crypto space, from tax preparation services, crypto estate attorneys, news services, crypto custodians, you name it. All the investment opportunities, everything is there.
Are you going to reprint the book?
I
probably
hope
wait
not.
a few more years.
I hope not. Writing a book is just...
Oh, dude.
It's a lot.
I'm in the middle of a project. It's not exactly writing a book, but like one weekend and I'm like...
But every time I
finish
finish writing a book, I say, I'm never going to write another book. And I've now said that 12 times.
Yeah, you've written quite a few. Ric Edelman, ladies and gentlemen, thank you so much for being on our show.
Thank you, Rick.
My pleasure, gents.
We've been looking forward to this a long time, and you did not disappoint. And we just appreciate everything that you do for the industry. So thank you. Duncan, any housekeeping, or are we good to go? All right, guys, thank you so much for listening. Make sure and watching. Make sure that you're doing likes and subscribes and hearts and all the things. Tell your friends about the show. We love the reviews. Put reviews on the Apple Podcasts specifically and Spotify podcast platforms. It's so important. We've got to trick the algorithm and convince it that we're doing something of quality here. Okay? So make sure you go ahead and do that. Shout to John. Great job this week. Nicole, Sean, Duncan, great job. Thank you guys so much. We will see you next week.